Here's what we're told: work hard, save your money in the bank, invest as much as you can, as often as you can. But here is the problem: the interest rates that you're going to get in the bank are so minuscule. And every single thing that you invest your money in, it doesn't matter if it is your 401k, if it is in direct stocks, if you are actively trading, if you're buying real estate, heck, even if you're investing in Bitcoin, the government is going to want its cut. And I wish that I had known what I'm about to tell you when I was a lot younger, because I would have a lot more money in my pocket and there would be a lot less that would have gone to the government. Rich people have been doing this for a very long time. Corporate America has been doing this for a long time. In fact, the biggest purchaser of cash value life insurance is banks, which means that they are taking your money and using it to buy cash value life insurance, which makes them money. And they take that money and they lend it right back to you in the form of mortgages or personal loans or credit cards or whatever it is. You could just be cutting the bank out and doing that yourself, so you are making the most of your money. If that sounds good, hang tight. I'm going to walk you through how to do it. My name is Nobu Musakiwa. I am a licensed financial professional and I specialize in cash value life insurance and also in annuities. I am a broker, which means that I work with multiple insurance companies. So my job is to understand what the client needs is, what are you trying to do exactly, what is your health, what is your income, and based on that full picture, recommend an insurance company that is the best fit, where you're most likely to get approved and also accomplish what you want to accomplish. So now with a cash value life insurance policy, here are the 4 different levers that you can pull at different times with this type of policy. These are not all of them. These are just the major ones that are most impactful. First and foremost, this is a life insurance policy. And so when you die, whenever that is, you are ensuring that there is some kind of benefit to that, right? Somebody is going to get the cash payout from a life insurance policy and you decide how big that is going to be. The second lever is liquidity. This is an account where every single month, part of your funds are going towards the insurance. The other part is going towards this savings bucket. That bucket is entirely in your control and you can use the funds at any time. Now, this is not an account where you're putting money in today and you're taking money tomorrow. This does require time to grow. If you want funds down the road, 2, 3, 4, 5 years from now, there'll definitely be funds in there. But if you just let it ride and be patient, there's going to be a lot of money in there in the next 10, 15, 20 years, just from the fact of that interest is compounding over time and your money continues to snowball on itself and just grow and grow and grow because of that compound interest. Your other leverage is being able to participate in the stock market. If you've read any book about making money, you know that the best place for you to put your money for it to grow is in the stock market. In this cash value life insurance policy, you are able to participate in an indexing strategy, which means that your money growth is tied to a specific index fund in the stock market, but your money is not in the stock market. What that means is you get to make money as if your money is in the stock market, but your money is 100% protected when the market crashes. Now, of course, the biggest benefit is that this is a life insurance policy, and based on tax codes, life insurance cannot be taxed if it is accessed in a specific way, which we will go over if you decide you want to move forward and have a one-on-one conversation. If you access this money appropriately, then every single dollar that you grow in this account is 100% tax-free. It cannot be taxed by the city, cannot be taxed by the state, it cannot be taxed by the IRS, in addition to anything that you leave in terms of that life insurance policy that also cannot be taxed at all. Not even a cent. So how does this work exactly? So you decide how much it is you want to contribute into this account every single month. A good place to start is 10% of your income, but it could be more, it could be less. How much you decide to put in is going to determine a few things. It's going to determine first what your insurance coverage is going to be. Second, it's going to determine what the max amount of money you can put into that account each year. And of course, that max is going to determine how much your money is going to grow over time. So essentially, if you want more money in the future, you want to be funding this more aggressively now, because over time, that money is going to grow based on compound interest. How much that money could grow to is going to depend on your age, how much you're putting in, what your health is. And so it does require sitting down with us and looking at those numbers based on you so you can see what that looks like. And this is not an account where you just raise your hand and say you want it and just show your ID. This is not available at banks. This is only available through insurance carriers, and it's only available by submitting a request that is designed specifically for the individual that is applying. And so this does require a one-on-one conversation to talk through what your goals are, what your health is, what your budget is, to design something that is specifically for you to see if the insurance carrier will go ahead and approve that. Now, you could go ahead and go about your life and not take any action, but if you are still here, it would seem that you're aware that what you're currently doing is not working. And so the next step to take if you want to see if you can qualify for one of these accounts is go ahead and book a call. Once you book your call, you are not done. There is a form that we need filled out so we can prepare for your call, do some research, and see what the best option is for you. If we do not have that form back within an hour, your time slot will be open back up, right? We do fill up pretty quickly. We are pretty busy. And so if we don't hear back from you, we will give that time to somebody else. And so just make sure that once you book that call, you check your email, you follow up with filling out that form, and we will have a 45-minute session to strategize whether or not this is a good fit for you. And if it's not a good fit, we will talk through other options that will make more sense based on your financial situation, your health, and your goals. I look forward to talking to you soon. Go ahead and book that call. Take care.